Hi, everyone. How you doing, Alexander? Richard? John, how are you? Nice to meet you. Welcome to F.A.C.E.
By the way, morning. Richard is Bran. Okay. Just so you know. No problem.
Okay. That's okay. Can I call him Richard?
You can call him Richard. You can call him anything you like, I think.
All right.
Morning, coach.
Anyway, good morning. How are you, Stel?
I'm very well, thank you.
Pretty
it's
busy.
Friday. Oh, no, it's not Friday. Oh, man.
I see. See how things get in this business? Huh? Thursdays feel like Fridays nowadays, don't they?
Yeah.
I thought I was the only one because, I'm senile. But
Dale, how are you going to call me today? How are you going to call me today?
What do you mean? How am I going to call you?
We're going to call you by your stage name, which is probably what?
Paula.
Cynthia. Yeah.
Paula.
Okay. All right. Well,
okay, it's getting weird. Let's get to the markets.
Hey, you guys are weird. Like he's going to start calling you like sweetie pie. I mean, what are you expecting?
Warriors.
Good morning, everybody. I reckon he's close to his dessert.
Hey, good morning, sugar buns.
Let's call him Cookie Monster for today.
Anyway, lots of monsters out there in the markets. That's for sure. So kind of a hang day came in front of the big data tomorrow on NFP.
Yeah, I think we're in pre-labor report territory. Shown a few things on the tens. We're in a bit of a channel on the short end as well. I think tomorrow we'll be closely scrutinizing the 4% on the twos, and then see where we end up after the report.
Okay, so I would tip of my hat to Blake. I tweeted it yesterday. He had a breakout line, and 38% retracement was good for at least a real nice day trade. So we'll see. I look at silver here, and it's an either or. I guess if they get a strong number, this will end up being a failing rally, and maybe some type of ABC. Could challenge 1950, but if the number's just in line, we could just pop to new highs. And I respect the way gold's acting, the way it's holding up. Just pulled back to this on the 4-hour. 250-day moving average and looks the same. Maybe it could revisit here, but this looks like bullish consolidation to me in both the gold and silver.
I mean, who wants a just inline number, Dale? No one wants inline. Give me something spectacular.
It's boring.
Give us a blowout. Come on.
All right. Well, I think I'd fade. I don't know a blowout, but a stronger number. Because I think 4% is going to hold for a while in yields.
You know what I'm hoping for, and this is, I'd love to hear what everybody has to say here. You want a lower number, or you said a higher number?
Just in line or a little higher, so that they bid up yields a little bit, because I think it's going to be a failing rally, and if that happens, I think you just have to buy dips. If yields pop a little bit, the gold may pull back again, and silver pull back again, and euro pull back again. I think euro down here, I would try it.
You know what I would love? I would love to see actually a really weak number, like a negative number, like we lost jobs. Like I know it's not going to happen. I'm pretty confident it's not going to happen.
And the dollar just craters, and this 110 level is pretty important.
Well, and then you snap it back up, because I think what would happen is stocks would actually scream higher on a weak number initially, and then everybody will sit back and go, "Oh crap, that was a really weak number," and then start selling. You know what I mean? So I think you'd get like a knee-jerk double reaction kind of move, and as a trader, that's kind of what we want, right?
S&Ps are holding up. Almost looks like, see how all these charts look alike? You had the big rally, and now you're consolidating in gold, and S&Ps were a little later to the party, but this was not much of a give back, and I think they're acting pretty good. I think you have to buy the whole board on breaks right now until they prove that this thing that happened here and happened here was, just another bear market rally everywhere. And I think it isn't. I think the character of the market changed last week.
Well, it's one of those things that I think we got to be prepared for volatility. I'm going to sit back. I want to hear what Kman has to say. I want to hear what Stelios and Steve have to say, because I got opinions, just like having a butthole. So I'm willing to share it. Well, no, wait, that didn't sound
your butthole.
Right. That did not sound right.
No, it's a joke.
No, I'm not willing to share my butthole. I'm sorry. Let me clarify
opinions
that.
Are like
all right, it's too early in the morning here, guys. I gotta go. All right, I'll be back.
Now I'm really scared because I'm going to be there in a few days. So I'm starting to
that is scary. And Steve, I didn't mean to scare you. And yes, Steve, just so you all know, Steve is traveling with his family from Greece. He'll be here at the end of the month.
1 day after the event.
Monday, right after the event, after the Trader Summit event, he's flying here, and it's the first time his wife's coming to the United States. We're gonna go explore the southwestern United States as he stays here at our house. So it'll be nice. Anyway, I'm gonna shut up for a second. I'll let you guys talk.
Okay. So Steve, what 110 on the dollar index, big number. I think even Jim Welch pointed towards it, said you can't get short the dollar. I've read some of his stuff last week until we take out 110. What do you think? Is this just another pullback in the dollar before we see new highs, or have we?
There is some nice momentum. There is some nice momentum to the downside for the time being. There's no question about it. Yeah. We also had prior to that an overthrow. So those are nice arguments in favor of the people that are always looking for reversals. Right.
Like me, I mean.
But
the major
we haven't invalidated the trend simply because we still have a series of higher lows, and that is still in play. The previous low is actually just below 108. So in my opinion, it's extremely, extremely hard to call a top in the dollar as long as we trade below 108. So my line in the sand is lower than the 120. Is actually from the 110, it's actually at 108.
Okay, there's a 50-day right there at 108.
There is also an ascending channel trend line support, but most importantly, as I said, it's the previous low that we crafted before the last
right here,
more or less vertical leg, to the upside. So we need to break through that to finally have a lower low and then start talking about the potential of a high, and either a much more important corrective move unfolding to the downside, or even some kind of a major top.
So does that hold you back from being a believer in this gold rally?
Yes, but also most importantly, what holds me back is the fact that gold is still testing a major descending channels trend line resistance as we speak.
Blake showed that the other day. It isn't, and we're right there, aren't we?
We are exactly right there. Yes.
And the 50-day looks like if it could clear it and we break out, that we could be seeing
that's going to be a big development. Same with silver above 2110.
Well, if we get a real weak number, that should be the catalyst. Hey, Grega, hey, how are you, man? Wizards.
I'm fine, thanks. I would also add that we should pay attention to U.S. yields. They made quite a nice bounce recently. So I think that we may even retest the highs. This could be very nice.
You think we could go to 4 again?
Yeah, I mean, if you draw the trend line, you will actually see that we broke, connected from the highs. We actually broke that trend line. And this appears to be like a very nice ABC setback. So with US yields trading higher, with gold trading higher at the same time, I just agree that this gold could face some serious resistance up here.
Okay, I wanted to ask you, an Elliotician, that before Monday's action, a lot of people are saying, well, we've only rallied in 3 waves. We were here, right? So the bear case was still possible. But since we had this extension and one more move to the upside, is this a reversal signature for you that did we have 5 waves up for one?
Yeah, I think that that's first leg that is completed, and now you are trading lower into wave C. I think that this area around 97.50 could easily be seen, especially with the current US yields. I'm not sure if even if US yields moves to a new high, it doesn't mean that euro dollar should retest the lows, because euro and pound were much stronger. But I think that if you want to be positioned dollar long, then maybe you should look for exactly like Aussie, Kiwi. I think that all of them.
Yeah, commodity currencies are underperforming.
Yeah, exactly.
So you know we're at resistance, but if we get through that, after we get through that resistance, when we get through that resistance, would that confirm a bottom in the gold for you? Because you were pretty close, Grega. You were talking 1610 when we were just playing with this breakdown here. You had targets down here. You were expecting a rally from here. Is this all you were expecting, or you're looking for more?
I think that it could rally more, but as I said, I just believe that we will see a deeper pullback first.
Okay.
So
maybe,
it depends.
Back to the breakdown.
Yeah,
if false breakdown.
If you go back to the daily.
Yeah. You could show your charts if you want to too.
No, it's okay. This could now also represents the resistance and potential right shoulder down towards 1670, 1680.
Okay, I see what you're talking about. You're talking about here. So here's the left shoulder.
Yeah,
head,
exactly.
And now we develop some type of right shoulder here. Could take a few weeks, right? Okay. All right. S&Ps, I did see your tweet, Grega, that you've turned constructive here. I was impressed the way it held up yesterday, and this divergence was pretty clear. Blake talked about it. We talked about this Monday. You have higher numbers. I know some analyticians that are still bearish said we need to cross like 3820 to invalidate their bear count.
Actually, it's the key number, the resistance level, it's around 3880 actually. That was that swing low back from early September.
Right here.
Yeah, so if we think that we are now rallying into wave 4, then this level should not be crossed. Okay. 38, 60, 80 around there, yes.
I was thinking up here 3960, when you break, sometimes when you break these major trend lines, you get a test. That comes in around 3940. You have some moving averages coming in here too. That's going to be important to me.
Yeah, but as I said, if the US yields will continue to the upside and US dollar may be more upside as well, just not sure how long stocks could stay in this current trend.
Okay, if we get a failing rally and take out 360, would you label this under 360 a good shot for 320?
Yeah, I mean, definitely want to see this broken, yes. If that happens, that 360 is broken, and even we finish the week down there after jobs data tomorrow, then yes, then this would be quite supportive for stocks. The things would change then. But for now, they're not.
The numbers, everything tomorrow. Seems like these numbers are everything.
For a few days they are everything.
Yeah.
Well,
I mean,
and then the market focuses on another number that's
the next
upcoming.
Thing. But I mean, this was a CPI. So I mean, this wasn't just a one-day event. This is when yield started to spike again after the CPI and change it. Go ahead.
It appears that everyone just waiting when finally jobs will come out very bad. So I think that will be a major change in trends for everything, I think.
Okay. So I know that the 10-year actually, it seems like we're getting a little steepening here, and TLT's trying to hold, but it looks like we should get a new low, but maybe it won't confirm. I tried to buy the bonds back here. It didn't work, but I'm getting tempted again if they sell them off on the jobs number tomorrow. So how about dollar, Grega? Why don't we wrap with your view on the Dixie here? So if you think yields are going to new highs,
I think
your view,
as I
failing
said,
rally here? Huh?
Yeah, I mean, it has a lot to do with this, with the euro, of course. So the strength of the current US dollar is not that significant compared to the yields. But anyhow, I just think that we could easily rally towards 112, 113, and that's where is the potential resistance for the intraday bounces. But for now, I think that they're, at least in the short term, or I should say in the next maybe 24 hours or so, we could see more strength.
You know, not many people are talking about, but copper's trying to break out here too, higher low. You do anything with the industrial metals, Grega? I don't think we've ever talked about them.
Yeah, actually, I just think that for now it's very tricky for commodities to
go up.
Yeah, actually, because everything is linked to the US dollar. I just think that sooner or later US dollar will find a major top, and that's when maybe, if that would be the case, it will have the very big impact on commodities. But for now, that's not the case yet. So I'm just waiting on this US dollar confirmation for potential top.
Bears are pretty frustrated with all the risk off we had that Bitcoin did not take out 18,000. Picture changing there for you?
No, I'm still bearish.
Okay.
Yeah,
Could we get a rally to 24 first before we fail?
No, I just think that, I mean, we had strong stock market now for the last few days, and we are actually still sideways on Bitcoin, on our cryptos in general. We have seen a very strong sell-off on stocks a few weeks back. Cryptos were sideways, so there is no real volatility, and usually that's not a good sign. So I just think that we either stay sideways or sooner or later we break to the downside.
Okay.
Hey, good morning, Grega. How you doing?
Hey, I'm fine, thanks. As long as the kids are fine, I'm fine.
What's that?
If kids are fine, I'm fine.
Right. Well,
no, you got that wrong. If the wife is fine, you're fine.
Yes.
Yeah.
That's the only thing that's going to take you to 20 years of marriage right there, is guaranteed. Well, I know your son had broke his arm, so hopefully he has a speedy recovery. I wanted to hear really quick. I wanted to hear from, because the euro's actually hitting lows right now. Kman, can you give us an idea of what was said on the ECB minutes that is driving the euro lower here? Because I'm gonna take over the charts really quick. I updated.
No.
Yeah, sorry, Dale. You can go back to looking at whatever you were looking at. Just kidding.
I could do private viewings now.
There you go. The euro is actually at what I consider, a strong support zone. This is our strong support zone we had yesterday. We overshot it a little bit. We bounced back up. We are back under pressure today following the ECB minutes that just came out. And I already sent this out via ForexAnalytix earlier. Like, if you guys are, you guys got this update from an hourly chart about 20 some odd pips ago. We might get an AB equals CD, takes us down to the 50% retracement, which would clear out a lot of longs here. But what is it in the ECB minutes that's driving the euro lower right now?
It's just lower by 15 points, right? It's their they're very low level warning on the euro. Really, they just say that lower euro contributes to higher inflation, and that's where the market just pushed another 15 points. But no, I think we're just yo-yoing, but in a pretty fast way in all currencies. The one that really can't keep a beat is sterling, really. Together with the commodity currencies, with the antipodians, but it's. I think a lot of the market is now waiting for numbers bad enough, I should say, for the Fed to pivot. That is it's really everything I read. Is it time yet? Are we there yet? And as we have been saying, yes, there will be a time. Is it tomorrow? We don't really know. I'm just getting ready for what tomorrow is going to be. I think it's going to be really a big mover in any direction.
Okay, and what you do mentally.
Yes, go ahead. Go ahead, Stel.
Oh, go ahead.
No, sorry, I was just going to say, for me, the little point which might have made a difference was that they mentioned that some of the members made the case for a 50 basis point hike instead of 75. And I think that's maybe why the euro kind of drifted a little bit lower. But really, it's not. I wouldn't call it a move.
I think that was so much, right? That they need to slow down. From the beginning, 50 or 75, right?
Yeah,
I'm sorry, you guys are talking over each other.
I said that was the choice from the beginning, in my opinion. 50 or 75, and the Hawks won. And I suppose some members, one of those some members would have been Lagarde herself.
Maybe, and Steve, I agree with you. You can't. I mean, it is a risk, right? You're going to push the Eurozone economy into a really nasty recession if you go too aggressive. So that's probably where these ECB members have it's always those people. It's where those ECB members are probably coming from.
What pushes economies into very deep recessions? High sustainable inflation.
Yeah, and I think, well, and that's what everybody is, battling right now. It's like, I
wouldn't really say the ECB is battling it, because how exactly do you battle 10% inflation with 1% rates? That's the problem.
Right. I guess the question is, how bad of a recession do you push everybody into? You know what I mean? So I don't know. I think that the euro is consolidating here. I think we have to be very careful. Today's fix, that we don't get a push below here. One of the things that's supporting, it's going to keep the dollar suppressed, in my opinion, is gold continues to hold up. And gold, in case you're not watching, gold is consolidating above 1,700, and I think that's a very big deal. Like, a lot of people don't, are like, gold's done moving, so I'm not watching it anymore.
I think they're worn out. Longs are worn out, man.
Well, longs are worn out. Let's how about this? Longs are stopping to catch their breath. We had, from the lows, after we had this false breakdown, we had basically a 7% move, and now all we're doing is we are consolidating gains. You know what that means?
I was talking about before the move. They've been look, I know, because I've been long for a while. My mining positions were down 25%.
You're like, I've been long since 2000, and I've been long for a while, and I'll tell you, they must be tired now, right? I'm joking.
Yeah, well, the last 6 months tired them out.
Yeah, it probably did. I mean,
since your last trader summit.
We really one of the things I think is a big deal in gold is we did create that false breakdown, maybe on a monthly basis. I mean, we closed the month below. No, did we? Do I have that wrong? No, I don't think we closed the month below there. But anyway, we did have this false breakdown, as you guys know, and now we're just consolidating these recent gains. I think gold explodes higher, and so but the only way that gold's going to do that is with the help. Data, yes, and the dollar. I mean, the dollar has got to participate here. The dollar,
but the dollar is going to react to that data.
And you know what's it's sad, and I know, Dale, you pointed this out all week. It is all one big trade, isn't it? I mean,
it is. It totally is.
Yeah, everything that we're doing.
So theoretically, then we should all be trading cryptos because they're high beta of stocks which are driven by.
That's right. Everybody should ditch what they're doing and trade crypto. That's it.
Sorry, I don't trade cryptos. I just buy them long term. Not
you buy them long term because you're
because I'm a big believer. Yes,
because your barista told
me too, Steve. My bid is still in Bitcoin at $30.
I outbid you. I'm a buyer at $99.
All right, hey guys, let's stop.
Right?
Yep.
Let's stop messing around. Let's talk a little bit about something more important. Let's talk about rates here. So, how do you guys feel about what's happening in yields? Because I was looking at the 10-year today, and Dale, this is your famous, throw over, nice little throw over chart. But the problem is that we didn't and weren't able to break down. And so I'm a little worried that yields are really strong here. Again,
looks like a bullish flag.
It looks like a pennant to me. Yeah.
Pennant,
yeah, I was gonna say it's all, you know, very, very you know, you could probably argue that, you know, it's a bull flag.
Needless to say, good
we're holding
good employment data tomorrow should, you know, make yields explode again, right?
Yes, absolutely.
Yeah, I can't wait for mortgage rates to go up to 8% here in the US. That's gonna be awesome. I'm joking. Yeah, you know,
if only you could sell your mortgage, right?
Right, exactly. God, if
in
I
the
could flip
secondary
my
market,
mortgage, it'd be great. Somebody want to take my that'd be awesome. Could I sell my, you know, sub 2.5% mortgage? That'd be greatness. But no, jokes aside though, I mean, yields look really strong. And that is you know, we were talking, I know you guys were talking about it with Grega a little bit earlier. That is very supportive of the dollar. And so it's hard to see the dollar really come unraveled when you got yields that are as strong as they are. And that's a fact. I mean, at least right now, you know, unless something pops up that I'm not aware of. Hey, what we have data coming out today?
Just the jobless claims.
Well, hey, you know, jobless claims, they do matter. I mean, it's that micro data
trending a bit better of late.
Yeah. I mean, but we do have to keep an eye on it, right? Because
200,000 expected.
Yeah, if it starts to, I mean, when you remember those days when we were consistently at 400,000 in jobless claims every week? I mean, you know, that was eons ago, and that was
these days
crises ago. But you know, it is something that I think we should be watching, the jobless claims, because if you want, like, you know, if everybody's laser focused, including the Fed, laser focused on jobs, we do need to, you know, keep that in mind. Damn, I just screwed up my screen. Give me a minute. Let me grab
and keep an eye on the short end of the yield curve as well. I mean, if we start to get worse data on the jobs, that 4% on the 2s and the 3s is not going to hold, in my opinion.
Okay, sorry, I'm gonna.
So
by the way,
I think it's going to move. Whatever happens tomorrow, those yields are going to move, in my opinion. It's going to be a big thing tomorrow.
By the way, while you're doing that, I just want to mention we have the Trader Summit event coming up 21st, 22nd, 23rd October. I put the link onto the chat box. It's free to register. We have a glorious lineup of speakers.
It is glorious.
It is, yeah. And it's a great time to have such an event with everything that's happening. So register for free, reserve your seat, and be the first to get the recordings when they're out.
Yeah, and you guys, if you guys haven't done so, it is, like Stelio said, it's free to enter or free to register. And guess what? 8cap is giving away 2 iPhone 14s that are unlocked to anybody who registers. Well, not to anybody who registers. That you're automatically entered into the drawing. So if you register, you become eligible to win one of 2 iPhone 14s, brand new, spanking new iPhones. You can turn around and flip them if you don't want them. I'd rather have one if my iPhone 13, I'd rather replace it, and you know, it'd be cool. But that's kind of cool. So make sure you guys register. Let me ask you guys this really quick before we got 1 minute. Dale, who's your favorite person, or who's the person you're looking forward to listening to the most, would you say?
I'd say Danny and Peter Schiff going at it.
Yeah, there's going to be a debate, by the way, guys and gals, on monetary policy.
Because I have no idea how that will go.
Yeah, we have no idea how that one's going to pan out, do we?
Guys, for me, the Fed insiders, I really want to hear what Danielle DiMartino and Joseph Wang have to say, because they were in there, right? So, and the Fed is ruling everything at the moment, so I can't wait for that.
Yeah, I'm actually excited since it's going to be our first time with Jim Bianco. I like to listen to him and the things that he has to say. I like his ideas. You know, whenever I can catch him on CNBC or Bloomberg, I'll catch him there. I think he's great wealth of knowledge. How about you, Kman?
No, I'm looking forward to the whole event. I mean, it's going to be the first event. I'm going to really be present the whole time and listen and look at the speakers and listen to the debates. It's going to be exciting.
Well, that'll be cool. Well, we appreciate you being part of it. Hold on, really quick. We got data coming out.
Yep. We do.
There it is. Just move that out of the way.
Any second.
A little weaker.
They're still not out. Now they're out.
Slightly
Yeah.
weaker, yeah.
Slightly
But
weaker.
revision
Good
slightly higher, so not
Yeah.
non-event.
Yeah. Well, I mean, the dollar is actually reacting. Look, the euro just popped up a good 4 or 5 pips, and I know it's not a whole lot. But you can see the stock market is actually the S&P just rallied like 5 points on that. You know, I had this conversation with Chris Weston last night on the trade-off. I have to say that the market, you know, we were talking about this, the market is really yearning for weak data. I mean, just clamoring for it. Just like, give me anything that suggests that the Fed might pivot soon, you know, and I mean, it's weird. You watch yesterday's markets, you had the ISM that wasn't weak. The ISM was actually strong, and the market shrugged that off, and it's just looking for reasons to rally. So if you give it just this little bit of a miss in the jobless claims, look at the S&P. We just popped 5, 6. That to me suggests that the market's pretty oversold. I'm not saying that it's like up is the only direction here. I am going to say that if we do have some weakness in the jobs report tomorrow, it comes in just let's say we just lose 50,000 jobs instead of printing a 250, 260 handle, we print 200,000 jobs. The market might look at that as a Goldilocks number. It's weak enough where it's getting the Fed's attention. They'll use that and just rip this market back to 3850 on the S&P. I think it's entirely possible, and I think that's
until Powell tells them again that we need more
until he poo-poo. Yeah, right. Until he poo-poos on it. All right, guys. Well, hey, Dale, I know you have an interview coming up. I don't know if this is the first time this gentleman or this person is coming on, but I want to pass it back over to you. I do want to mention I am going to be doing an interview with one of our trader funding program traders who just received a payout, and that's going to be on the Trader Summit site this next week. So make sure you guys are following along via Trader Summit. I'm excited to talk to him, give you guys some clues about the trader funding program. So make sure you check this out. Oh, did we get the new site? Oh,
yep.
Oh, wow.
Oh,
We got a new website out here. So check out the trader funding program, and listen or look at that 2-minute video. It'll tell you all about it. All right, guys. That's it. Dale, it's all yours.
Thank you, team.
Thanks, everybody.
Alexander Perna, welcome to F.A.C.E. Nice to meet you.
Hi, Dale. Welcome. Thank you for having me.
Yeah, so I really looking forward to getting to know you a little bit, Alexander. I'll walk you through for the screen share. You just run your cursor. Oh, I thought you only had a mic.
No, I have a video. I just didn't get it all set up. I haven't done a webinar in a really long time. So
okay.
There you are.
Okay, I just have to do something. Choose background. I thought you basically just had you said I'm working on a laptop with a mic. Anyway, do you want to do some screen sharing here?
Sure. Yeah, okay. Definitely.
All right. So what you do is you just scroll your cursor down at the bottom.
Oh, I see.
And you'll see a share screen. And I'm interested because you're a proponent and a user of RSI. And, despite a lot of people's criticism of indicators, and at times, it has, nothing works all the time. I think it's an important tool for a few different reasons that you could use it to be with the trend or look for inflection points. So interested to hear your use of the RSI. But first, can you go back and tell us a little bit about your journey, Alexander, and where you were? Did you always think when you were young you're going to be doing this, or was it a long and winding road that got you here? What were you doing before you were in the industry?
Oh man, working for Five Guys. So I don't know if you've had any of their burgers. Still love them.
I've never had one.
No. 5 Guys and In-N-Out. It's hard to, for me, that's like my top two.
Okay.
But so a little bit about me. I guess, you know, one of the nice things that I have going for me is that I came to trading pretty early on. So I was about 18 or so, and I know that's like common now. Actually, there's so many young traders coming in, especially after COVID. But back in 2008,
it was unusual.
Really unusual. So I'm 33 now, so been involved with the markets for quite a bit of my life. Started working for a fairly well-known trading company, a school, teaches people how to trade, kind of worked my way up through the ranks, and then left right after COVID. So it was a very travel intensive job. And so once COVID kind of hit, the travel stopped. The webinars are nice, but I really like getting up in front of people. I used to teach classes of maybe 10 to 25 individuals at a time for about a week. And so I did that for a good 5 years, working for that company for a total of about 13. So that's really where I got my trading knowledge, my education. It was really neat. I got to rub shoulders with a lot of traders who just have the experience that I dream about, you know, working on the floor and just being there, whether it was the CME or the NYSE, you know, just really cool experience for me to kind of get not just the trading side, but the psychology side, and being able to talk to traders, having that community is really what brought me up. So I've been doing this now since I've been trading live probably since 2010. I invest in stocks and options, primarily trading Forex. I do a little bit of commodities, mostly the metals. And let's see, that's my trading background.
So you must have, I tell you, you had a lot of stamina and a lot of patience to teach for that long and with that intensity.
Oh yeah, a lot of talking when you're just trying to go through the kind of nuts and bolts of the market and pack it into a week. You know, makes it kind of tough, but it was a really good experience. You know,
so are you just, I saw on your Twitter feed that basically I don't see a service you're promoting here on the Twitter.
No, I don't.
Just trading your own account.
Just trading my own account. So I did the Limelight public thing for a bit of time, and so it was nice just to kind of become a hermit for a little bit, you know, hide out. I got, you know, actually that's really when I got involved with social media. So if you check my Twitter, it's like April 2020, because I'm sitting there not really able to, you know, get out of the house. So that was the time to really start social media. So even before 2020, I wasn't really involved with Twitter or Instagram or Facebook, YouTube. I had, you know, I had a very packed life. I love to travel. I love to see different parts of the world, different cultures. So if I wasn't in the classroom, you know, I was somewhere else, normally in Asia, and you know, didn't really keep up with the social media thing. It's hard to do that stuff when you're on like a 2-week motorcycle trip through Vietnam. You know, it gets remote.
Okay, so why don't you tell us a little bit about RSI and how you use it in the markets? I'm looking for, you know, I see over on the right hand side, I don't see any RSI on your charts on the left side, but it looks like, do you mean RSI by using the relative strength index, or are you just talking about relative strength as far as what is displaying the most strength and weakness, and making your trade selections that way?
Yeah, you got it. A lot of people assume, especially when I say relative strength, they think of the indicator.
Okay, you're going back to Investor Business Daily days where they would have relative strength rankings of securities.
Yeah, I mean, it's maybe it's not the most common way to analyze the market, but it certainly can be done in any of the assets, stocks, even like futures. You know, what I like about where I really got it from is the Forex market, just because it makes it so really explicit. You know, when we're looking at a ticker symbol, it's showing us that there's basically two products that we're comparing to one another. Right? We never trade the euro, or we don't just trade the dollar, but we trade a relationship between those two. And that's really what got me started, because you know, when you think about it, everything's a pair. If price is changing, you're comparing two different things, whether it's SPY to dollars, oil to dollars, you know, the shoes that you buy at the store, $2, you know, it's a shoe dollar pair.
So let me ask you, let me ask you why. So you'd like to differentiate relative strength within currencies, like, you know, is like euro pound going up makes euro your preferred long, right? Cable your preferred short, but you chose the dollar to talk about here today, and that doesn't give you, it's pretty much heavily weighted euro. But why don't we start with what you're seeing on your different time frames in the dollar, and if your work is saying what would it take to say that this pullback in the dollar is more than a correction?
Okay, so just to start off, I don't derive these values from indexes. Like you said, the dollar index, the Dixie, heavily weighted into the euro. So it's basically just an inverse picture. What I actually do is I look at the individual currency pairs. I'll basket all the euro pairs, you know, euro dollar, euro yen, euro pound, euro New Zealand, all the way down. And I'll do an analysis on each individual euro pair to give me an idea of what is the strength of the euro across the board. And once I kind of go through that analysis, I'm able to put the single currencies in numerical order. So as you see on the right side of my screen, like right now, you know, New Zealand is at the top. I don't know why this one, there we go. So you can see New Zealand has been at the top, starting to gain some strength. The blue line here is the dollar starting to gain some strength. These ones over here are longer time frames, but this is what I post on Twitter, just to give a more kind of more frequency to it. This can change every day, where these ones on the right of this window really are deriving the values from like weekly charts and daily charts. So very, very high time frame. This one's from a 4-hour. So it gives it a little bit more robustness, can kind of see what currencies are doing better, you know, kind of comparing these charts, you know, notice how New Zealand is just at the bottom. I mean, it's been getting whaled, you know, as part of the currencies. The commodity block hasn't been doing well. But recently, it's been, you know, trying to push back and claw back some of its losses. So you can see New Zealand for a little bit has had strength. There you go. You can see it kind of topped out here. So just kind of looking at that New Zealand kind of structure, for me, this would be more of New Zealand's in some kind of pullback, right? So the strength that we're seeing in New Zealand is really just the market kind of
bear market rally.
Yeah, taking a little breath. I mean, I do look at the Dixie. Don't really trade it. It's more of just got to get a bias. You know, if I'm going to trade euro dollar, if I'm going to trade dollar yen, I want to know what the dollar's doing. So, you know, I put levels on here. I am I would say relative strength is a tool. My strategy is supply and demand. So that's what I've taught when I was in the education circuit. You know, supply and demand zones made popular by Sam Seiden, Online Trading Academy, that kind of group.
Finally, the confession.
Well, I didn't want to advertise anything on someone else's channel.
They're still in business, aren't they?
Yeah. Oh, yeah. Yeah. I mean, they were doing fine. I mean, COVID really took took a lot out of them because they were primarily physical classrooms. So, they had to go through a time where no one was allowed to see anyone else, including your grandparents. So
was that the only problem? They got heavily fined for something. Who was the regulator that fined them?
I didn't really stay too much up on it. I know it was part of the sales team kind of thing. From what I heard, from what they told me, it was more like testimonial things. So someone has a testimonial saying, I made $10,000 in this trade. If that's not the average result of all of your traders, then you can't say that.
Yeah.
So that was kind of where it all started to unwind. And then on top of that,
but
COVID.
They survived it. They survived it. Yeah.
Yeah.
They paid the ticket. They paid the ticket, and they probably have better compliance now, and they moved on. So okay. And that's what they teach, really, the supply demand zones, right? They made that very popular.
Yeah, that's what they call the core strategy. That's kind of how it developed. When I started as a student, it was just pay for a course.
Yeah, what did you pay when you signed up?
I paid about $7,000 for the class, and the classes were lifetime, and that was always great. But back then it was kind of come into a classroom and we'll put you in front of someone who's actually trading, actually making money. The problem with that is, you go to take a retake, because we had lifetime retakes, and it was with a different instructor who traded differently. So, there wasn't even really any connection between one class and the other. It was just, hey, get in front of someone who trades and just take that week with them. So over time, they did start to really hone in on supply and demand, probably around 2009 or so. 2010 is when they really kind of made it their focus. And then that was what it was since. And I've always traded supply and demand. I've dabbled in pretty much all the other indicators. When I was 20, I was taking the CMT tests. I stopped at the second level because back then they said if you didn't work for a brokerage, then you don't have industry experience. So I kind of just gave that up. But I love the markets. I love technical analysis. I do that kind of study stuff as a hobby, to be honest.
Why are you on social media if you're just trading your own account? Are you lonely?
It did get lonely. I was used to working in a community. I was used to working. It was, and it was had to find something else to kind of fill my time. I actually lowered my time frames. Before COVID, I never went under a 4-hour time frame. Now I primarily trade the 1 hour. So time frames dropped down a little bit to give me something to do. But it was also, once I left, my relative strength is proprietary to me. And even though I would teach how to do it in my classes, a lot of people just kind of want to be given the value. So I thought this would be a good way.
Because actually someone asked about that just now, an attendee, how Alexander did that currency strength indicator in TradingView.
This was actually programmed for me. So I am not a coder by any means. I can barely type. These are my typing fingers.
ForexAnalytix has a great community. I mean, a lot of people that make a living from there. I'm a big believer in it. I mean, we only have 2 eyes. You ought to check ours out if you're looking for people to collaborate with. It's really dynamic. So I didn't invite you on to solicit you to join ForexAnalytix, but it is a fact that it's a great community and people have been with us for 10 years. So the retention is a statement.
Nice.
Okay, so do you have a view on the dollar? Are you more of a day trader scalper, or do you ever have some long-term views that you take a stand with, and that we could be near some inflection points here? I mean, the dollar's been on a run forever. Everything ends. This too shall pass. Are we in your work starting to get to that window where perhaps the dollar is, in the ninth inning of its glory days?
Well, I'm a longer term trend trader, so
Okay.
more in the swing trading category. I don't day trade. I'm too emotional for that. But this is my setup. Bottom right hand corner weekly. Then we go daily, upper right hand corner, 4 hour on the bottom left hand corner, and then the 1 hour. So this is pretty much what I look at. I am definitely a dollar bull. As a trend trader, I'm not really thinking about when the next major reversal is going to be. But definitely with price at demand, we're getting some nice reaction here. Bullish engulfing pattern. 110. Heard you guys talking about that. I think extends a little bit lower. I mean, for me to really be like, okay, we're in major pullback mode, I would want to see, close below 109.27. But definitely that 110 is the psychological level that I think everyone's really looking at. But with that engulfing pattern, with just the overall structure of the daily time frame, I'm definitely bullish. I'm going to remain bullish.
Under 110, the picture changes for you?
At least in terms of going to see a much deeper pullback. So just kind of looking at the structure here, this is how I see the daily trend. So my swing low is until all the way down here. So we could have a much greater pullback, bringing us down to like that 105.50 area, which is kind of like another psychological area. The zone's a little bit higher, but that would definitely be another place that I would look for. But I would definitely, I guess, back off of being aggressively bullish the dollar below that 110 area. And even, looking at the Dixie, as much as this gives me a bias, what I would really be looking at is what is the euro looking like? If euro is probably a bad example because it's just so weak, but the dollar could be falling, and the euro dollar is still going down. Oh, I guess that would be a good example, just in the relative strength, so we could get a retracement in the Dixie, and it doesn't really mess up the structure of like the euro downtrend. And so that's really where the rubber meets the road for me. I would take this information, and if we're looking at like Aussie dollar has been really good lately.
It's been weaker than the euro the last week or so. I mean, the recovery in Aussie's been, to me, looks like, more feeble on a relative strength. And I thought it was going to lead when the dollar came off because it held up so well, never took out its COVID low.
Something's happening here. It's not
where you can't change your charts.
All of a sudden, trading view got slow. It says here, page unresponsive. What if I just exit?
Okay. Well, we're starting to, get to the point of wrapping it here.
Already?
Do you want followers? You want people to get in touch with you, Alexander, and so you could share your work?
Sure. I mean, I post stuff on Twitter. As you pointed out, I don't offer any services. I don't mentor. I don't teach anymore. I really just kind of post stuff on Twitter, what I'm looking at. I do post my relative strength stuff every day, normally around 8 p.m. Eastern time. I try to get it out for the beginning of the Asian session, and we kind of will go through that 24-hour period, and then I'll post it again, 8 p.m. the next day. And I'll do that Sunday through Thursday. I don't do it on Friday because the market's closed, going into the weekend. Other than that, no, I just, y'all are welcome to follow me. I would love to, I can't believe this happened. Like right at the golden, I was going to get to something and look at candlesticks and charts, and I don't know why this is doing
well, we could do it again. You could find Alexander at Who's Trend like the band, the Who, HWHOS trend is where you could find
Yeah.
Alexander. I'm curious, someone who was well traveled throughout the country and maybe the world as an educator, where do you trade from?
Where
where are you now?
I live in Florida. I live in Clearwater, Florida.
Okay.
So I'm still alive. I'm not
good.
a ghost. We made it through Ian, which is nice. We were very lucky here in Clearwater. We actually say that the grounds are kind of blessed by the Indian burials. That's kind of the saying around here. For the last 100 years, every storm that's had its eye on us just turns. So, I'm sorry, Miami, and I'm sorry, New Orleans.
and if you could be anywhere in the world or places that you've seen, where would that dream take you?
It's really hard. I live in everyone else's vacation. Clearwater, Florida. I mean, I've been all around the world, and it's hard to point out a better beach. Even Hawaii or even Bali, Indonesia. Really hard to beat Clearwater. I just like to travel. If I could, my dream would be to have places all over. Be able to go spend time in Asia and not so much Europe right now.
Okay. Well,
but
go ahead.
No, I definitely I enjoy it. I enjoy. I guess outside of Clearwater, Japan was a really great place for me. I did Japanese swordsmanship for about 10 years. Very old kind of samurai styles. So
interesting.
Very interesting.
Well, I tell you, it was interesting to talk to you, Alexander. You've had quite a journey, and I'm rooting for you, and hope that this new life, on your own in the markets is a fruitful one.
Thank you, Dale.
You're very welcome, and appreciate you telling the story and your time at OTA and what you use and how you think, and just was really nice to meet someone new off Twitter, and I could tell you're a pro because you do you think that it was worth the 7K that you paid OTA when you paid?
It was. I mean, it was. It's a lot more expensive these days, but it was. It didn't just. It really changed my life. I mean, before stumbling across the market, I was just like every other teenager. All I really cared about was, where was the next party? What's going on this weekend? The markets really, for the first time in my life, it really did. It lit a passion. And I guess that's one of the very lucky things is that I was able to find passion very early on. I feel like there's a lot of misery in the world, and a lot of it has to do with settling and not going after those things that just create a flame within us. I think that's really important, and I would definitely say for any aspiring trader who's still struggling, you've got to find that passion, and that passion is going to drive that skill development, because win or lose, you love what you're doing. It's not what do they say? It's not people doing things to make them happy, but it's happy people doing things. It's that mindset where just wanting to know more. Even when I have a weekly drawdown, I'm interested. It's like, why did that happen? Let me try to figure this out, rather than, getting upset, pouting. Why is the market against me? I really find that passion as just that drive to keep pushing forward. So, I was very lucky. I found it very early, and I would say I would pay 10 times what I paid if
it was a turning point for you, not necessarily what you learned, but the direction it steered you in. And we all have to keep moving on and live through adversity. If things don't work out, you have to push on and don't quit your dreaming. Don't quit your daydream. And I love your tagline you have, no days on alert.
Right.
So thanks for alerting us to your journey and informing us and sharing some words from an experienced pro.
Thanks, Dale. And it was an honor to be here. Thanks for reaching out and inviting me in. That was really cool of you.
All
and
right.
I would love to come back, hopefully with charts that will update.
All right. Well, we'll talk again in a few months. All right.
Cool.
All right.
Take care, Dale. Bye, everyone.
Okay. Alexander Perna, everybody. You can follow him at Who's Trend. And remember, don't just count your pips, count your blessings. I think you heard it from Alexander, and I'm sure it wasn't an easy road, but here he is standing. So everyone, you could join the team in 15 minutes on the Morning Edge. That's a wrap, and I'll see everyone for the NFP tomorrow. It should be no frickin' problem. Thank you, Alexander.